Hello everyone, welcome back to the channel. Just a quick disclaimer before we begin. This video is for information and educational purpose only. Please do your own research or consult a professional before making any decision based on this content. Thank you.
Today, we will explore Opendoor Technologies, identified by the ticker Open, which is a platform leveraging technology to transform how homes are bought and sold. Acting as an iBuyer, Opendoor provides homeowners with immediate cash offers, purchases properties, manages necessary renovations or upgrades, and subsequently sells them. In addition to this primary function, the company also offers services such as MLS listings, title and escrow, mortgage, and insurance, effectively aiming to consolidate many elements of the residential real estate transaction process. Over the last 10 years, Opendoor has broadened its presence across numerous markets in the U.S. and enhanced its technological framework to support pricing strategies, transaction processes, and logistics management. The company believes that offering speed and reliability, allowing sales without the hassle of showings or uncertainty in listings, will attract a sufficient number of homeowners to facilitate growth. Nevertheless, this business model requires significant capital investment. Opendoor maintains inventory, incurs holding expenses, invests in repairs, and faces risks related to fluctuations in real estate prices, high interest rates, and diminished liquidity during sluggish markets. From a financial perspective, Open has historically experienced considerable losses, with profitability remaining elusive. Revenue has experienced substantial volatility. Some years report billions in home transactions while still resulting in net losses amounting to hundreds of millions. An analyst indicated that the company's net loss over the last year exceeded $368 million, highlighting the substantial costs associated with maintaining liquidity and scaling inventory operations. In 2025, Opendoor encountered challenges due to a sluggish housing market and elevated mortgage rates that dampen transaction activity and raise financing expenses. Recently, the stock for Open has experienced notable volatility. Its price has risen sharply as retail investors have treated it like a meme stock, influenced in part by calls for the return of its co-founders, leadership transitions, and a refreshed narrative regarding real estate technology. Co-founders Keith Rabois and Eric Wu have recently returned to the board, and Kaz Najatian, formerly COO at Shopify, has been appointed as CEO, decisions that have sparked renewed enthusiasm and volatility. High short interest and increasing institutional involvement are contributing factors to significant intraday price fluctuations. In conclusion, Opendoor represents a speculative investment characterized by high volatility in both real estate and technology. The company's potential for growth relies on its capacity to optimize operations, manage capital expenses, scale transactions profitably, and fulfill its vision of simplifying home trading. However, substantial risks remain. Fluctuations in housing markets, financing pressures, operational execution hurdles, and shifts in investor sentiment could undermine the prevailing excitement.